Big money is moving in crypto, and the early signals are flashing. If you want a simple plan for what to do for this crypto bull run before it ends, this is for you. I'm Brett at CryptoGX, and in this video, I'm going to help you read all the signs, build a very calm plan, and use clear visuals as we go. I'm going to keep it really simple, but keep in mind, you should watch till the end because the real edge might not be what you think it is. So we're going to take a step back and keep it really simple for the beginners and start with what is a bull run when it comes to crypto. So this is an overview, and I know it looks a little bit scary, but this is the historical cycles that we've had, including the bull runs and bear runs. So a bull run is a long stretch where prices are trending up over time. It's not a one big day. It's many steps across months. You can see that in all of these yellow marks here. All of these yellow areas are the bull run where the price is going up as part of the cycle. Now there's also other coins that are not Bitcoin. These are called altcoins, and they may be any coin that's not Bitcoin. That's it. Really simple. You can find these kinds of terms on investopedia.com and find out all their definitions and things like that, but we're keeping it real simple here. Now there's also stablecoins. A stablecoin tries to stay near $1 or €1, whatever the fiat money is, fiat being like $1 or €1. These are used so that you can put your cash in crypto and have it ready to be trading with other coins, but it's meant to be steady and not exciting or volatile and changing price. So now that we got the definitions out of the way, let's talk about why this cycle feels different. Well, in 2024, spot Bitcoin funds were approved in the US, and that made it easier for regular investors and big institutions to buy Bitcoin exposure. If you'd like to look up more about this, it's on sec.gov. Now, Bitcoin's halving also happened in 2024. This is when basically the new Bitcoin supply is reduced in half, which tightens the supply over time. I've got more videos on what a Bitcoin halving is. I recommend you check those out. But essentially, when miners are mining Bitcoin, they get half as much every 4 years. So they'll get, let's say, I think it was 6.25, then it was cut again in 2024 to 3.125 Bitcoin for every block, which takes a while to mine. That's not important for this video, but just so you get a brief understanding. Now, in this crypto cycle, AI spending has grabbed a lot of attention across different markets. When big tech talks about AI, some crypto projects then, end up diving into AI, and these sort of themes draw eyes from a broader crowd. Now, ETFs have been huge in this current cycle as well, and in past cycles. An ETF is an exchange-traded fund. It is a basket like you would buy of a stock or many stocks, and inside a normal brokerage account is where you would find these. So something like a Fidelity account or BlackRock account. It tracks something, another asset, in this case Bitcoin or Ethereum, and now other cryptocurrencies are getting added to their own ETFs, and that's really important. Now this is important because ETF money flows can act like fuel. When inflows are strong, it shows demand, and then when outflows appear, then the demand has cooled down. Now with ETFs, it's important to note that they also come with fees and regular reports. You should know what you own and what it costs, so when you buy into an ETF, whether it's a Bitcoin one, an Ethereum one, or a mixed bag, you should know what is in it and how much it costs, because there are costs for whoever is running this ETF, and that's why people make ETFs, or big companies make ETFs, because they're going to make money off of managing it. Now we need to talk about AI's influence on crypto, especially within this cycle, because it hasn't been prevalent really in previous cycles. And it's important to note that AI is a story rather than a guarantee, at the moment at least. When AI headlines are very prevalent, some AI-linked crypto tokens are going to, run with that and get really high prices, and that's great. But then when the kind of headlines cool off, they'll also drop really fast. So they're at the moment a really trending topic that doesn't particularly show necessarily any utility or long-term value. At the moment, it's good to use AI as a research helper rather than like a crystal ball giving you everything you need. You can have it gather facts for you, but just decide on your own set of rules for making decisions on what to buy. Make those rules really simple and clear to you. And obviously, we're going to talk about some of those ideas later on as we continue through this video. Now, with those rules in mind, let's talk about some of the things to watch for. Number one is to watch for ETF inflows or fresh demand. As I mentioned before, rising inflows often mean more buyers are stepping in. And the same thing inversely with outflows. You got to be careful for outflows because that usually is going to make a price decrease. Another really great tool to check out is the Bitcoin dominance chart. If dominance rises, then money is favoring Bitcoin over altcoins. When dominance stalls or it falls, the risk may be shifting into altcoins. Next, you're going to want to check the top coin rankings by market cap. Big changes near the top often will hint at what the crowd is buying. If they're shifting, let's say if all of a sudden XRP shifts to being more valuable than Ethereum by market cap, which you can see right here, that would be an insane movement. These three are typically going to be XRP in the top. As you can see, XRP and Tether and BNB and Solana are much closer than, XRP and Ethereum or Ethereum and Bitcoin. So in this kind of top 10 range, as these things move around, and even the ones below that, moving up the list here, you got to be watching for those and see what's going on, because typically, as I've mentioned in other videos, money moves into Bitcoin first, then it moves into Ethereum, and then it moves into altcoins. So right now we're looking into Bitcoin first, and we'll keep an eye on the rest. Now, crypto is volatile. We got to talk about risks, of course. The price can swing a lot in both directions, and that's really normal. So you have to size up the positions that you're putting your investment very calmly and appropriately for what you are willing to risk and what you would be willing to lose. Now, I showed this before. It is a report on stablecoins from November of 2021. It talks about a lot of good things regarding stablecoins, but essentially another thing that I wanted to bring up with stablecoins is that they can wobble price-wise if the backing gets stressed. So even a steady asset will need a quick look under the hood to see what's going on. The dollar changes all the time when it comes to inflation, and that's an important factor. And certain companies who have backing of particular dollars are not necessarily actually backing it up with the dollars. There's been some interesting things going on with Tether where people are losing confidence in if they're actually backing it up dollar for dollar. And so you got to look into the company that is managing these stablecoins to see if they're doing it correctly and under the management and regulations within the US government. And when it comes to ETFs, they're very convenient, but they're not magic. So you got to read into the basics. You have to read into the fees and how that fund tracks the asset itself, because it's not going to be the same thing as buying, let's say, Bitcoin, for example, on any sort of decentralized exchange where you actually own Bitcoin. It's going to somewhat be similar to the price, but not quite exact. So most often be off by a tiny, tiny percent. So let's make a simple plan for any beginner. Use core and satellite. Basically make your core strong and boring, and then add small satellite bets that you really understand very, very well. These are your kind of risky plays. Now, a very simple crypto core is Bitcoin and Ethereum. They are the largest and the most followed, with very deep liquidity and attention, and basically a huge amount of money in them. So that's typically going to make them the most stable. Now, satellites are going to be anything below those top two there. And these don't necessarily just have to be because they're on the top 10 or top 20 or even the top 100 list. The most money can be made typically when it's the further down on the market cap list here. Just make sure to do a lot of studying on what these particular satellites are. If they're a layer 2 option, if they're DeFi, if they're AI. Keep each one small so that you don't make a huge mistake by sinking all of your funds into one area, because all of these, just like stocks in the stock market, are almost essentially their own particular industry. You should have a balance of anything when it comes to, let's say, AI or DeFi or gaming or anything like that. You want to have a good mix so that if the entire gaming market gets affected, then you have some DeFi and some AI that are not going to be hit as hard. Now next, this is one that is near and dear to my heart. It is called dollar cost averaging. This means that you buy a fixed amount on a schedule so that you don't try to guess the tops and the bottom. Essentially, there has been lots and lots of historical data on whether or not trying to time the market, buying at the low and then selling at the high, is better or not. And there's so much data on timing the market does not work. You will always, at least for any sort of beginner, perform much better if you just buy regularly. Let's say you get a bi-weekly paycheck. Every 2 weeks, you put 5% of your paycheck into an investment account, and then you spread that across all of your investments, whatever they may be. If you keep making these regular buys, then you're going to average in the price that you're paying for them. And, if it goes up and down, then you're going to be right in the middle, and over time, you are going to be much better off. Another thing that is a very close second to dollar cost averaging is called rebalancing. Put a timer out there, put a reminder out there for you to check monthly or quarterly, at least, if not yearly, so that if, one of your satellites runs really hot, it jumps up insanely high, you can skim it back to kind of your target percentage of your entire portfolio, and then you can, move it around and keep that percentage nice and even out so that you can keep a certain amount of your portfolio safe and a certain amount of it risky. Now, I did did this in particular on kind of the opposite end. About a year ago, Bitcoin ran up in November leading into December, and I was ready to accept more risk. So then I took out of Bitcoin and then balanced it into altcoins, and then altcoins had their run up. Now, if I rebalanced again when the altcoins kind of cooled off, that would have been better. So keeping your rebalancing going, depending on what's going on in the market, is really good, especially at least quarterly, in my opinion. Now, with all of this important background, let's find out how we should actually look at 2025 and the bull run. Things that we've seen is the having cut the new supply back in December, So here's how we can look at this with the things that have been happening. As we can see, in about May of 2024, the having cut the new supply in half. Also, spot ETFs were introduced to kind of lower the barrier to entry for big money and big investors. AI has grabbed attention, and sometimes that flow is spilling into crypto. And then all of that led to big increases here during our bull market. These are just the specific topics that are going on during our particular Bitcoin bull run. But as you can see, this is the trend that we're in currently, and we're not all the way done. You can see this went 174 bars, 176, 121 here, and now we're only at 102 bars. So we've got at least, if we're going historically, at least another about 19 to 20 bars, or basically 60 days to go on our bull run here. If not even further, if we're going with the last couple cycles here with 528 days, 522 days, we can expect another potentially 200 days of this bull cycle. Now, this is from February. This is not an up to the minute chart. Oh, we need to go back to the beginning because that's been 200 days. Go to before I mention anything about the time. So those topics were during our current Bitcoin bull run. And this is not an up to the minute chart because this is going to February. We are probably at about 500-ish days so far because this is February. So we are coming up to the end here, and I expect this to happen sometime in October here. But historically, and you can check the other video that I made the other day about October, and I suggest you do, and we'll have lots more videos on the channel about keeping up to date with the top here. But October is typically an upward direction for Bitcoin. So there's still time in this bull market. I definitely suggest that you do some more research and get your own portfolio together, your own rules together to find out how you want to set up your portfolio. Now, if all of these things line up, you set your plan to do the work. You aren't chasing anything when it comes to particular candles on a chart. Scale in with your dollar cost averaging and then protect your position with any sort of rebalancing and restructuring to cater to the risk that you're okay with. That's going to be the best thing to put you in the best spot. You're basically going to be putting your best foot forward with that. With this setup and some deliberate patience, I can see you being far, far ahead of most investors just from watching this particular video. Keep an eye currently on the ETF inflows, the Bitcoin dominance, and just kind of the overall health with the fear and greed index of the market, and let your plan run out, and I think that you will do very good. If you haven't got any crypto yet, or you just want to get some more, I will put links in the description for Coinbase and crypto.com, where you'll get at least $50 in crypto just for signing up with those links. And if you want to get into meme coins, I also left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed this video, make sure to hit that like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.